LLC S-Corp. How do you choose? Hey, thanks for stopping by, taking your time out of your busy day to watch this video. I hope it helps you out. My name is Keith Wilson with Wilson Financial Advisors. All right, so you're an entrepreneur and you've started your own business, right? It's important to consider how to set it up for tax purposes. So here's an example. Let's say you decided to open a bakery. And without forming a business entity, you would be what is called a sole proprietor. As a sole proprietor, any profits from your business is going to be taxed to you. What kind of taxes? You will pay federal income tax, state income tax, if you live in a state that has state income tax, and more importantly, self-employment tax. Now, the current self-employment tax is 15.3%. Why do you have to pay this? Well, if you've ever been an employee of a company, you probably were aware that there were a lot of deductions from your paycheck, right? Federal tax, state tax, and payroll tax. That payroll tax consisted of Social Security, which is 6.2% paid by you, and 6.2% paid by the company, as well as Medicare tax, 1.45% paid by you, 1.45% paid by the company. So, since you are in business for yourself, you pay the full amount, which comes to that 15.3%, right? Now, you would file taxes on what is called a Schedule C. And this is where you list all your expenses you incurred, and what was left over is the profit. Now, another thing with sole proprietor is, hey, there's no protection. So let's say someone comes into your bakery and slips and falls, and they may try to sue you. Not only could they sue your business, they can go after your personal assets as well. So this doesn't sound good, does it? So what a lot of small businesses do is they create their own entity and file it with their state. And the two common business entities for small businesses is the LLC and the S-Corp. Now, both have similarities, but when it comes to taxes, they differ. Let's talk about LLC. LLC stands for Limited Liability Company, and this gives you protection. So if something happened with your business and someone tries to sue you, they can't go after your personal assets. Same thing with an S-Corp. Both have what is called pass-through taxation. So if your company had $100,000 in profits, all of that would be taxed to you, whether or not you actually distributed all of it to you. Now, like the sole proprietor, you would file taxes on the Schedule C. With the S-Corp, however, it works a little differently. You would become an employee of your company and you pay yourself a reasonable salary, right? Now, what is a reasonable salary? Well, you may want to look at what other people in your area are being paid for what you are doing and base it off of that. Now, with the S-Corp, you can avoid some of that self-employment tax. Here's how it works. Let's use the same example and say your company profits were $100,000 and you paid yourself $50,000. So you would pay federal tax on that, state income tax, as well as the 15.3% for Social Security and Medicare. Now, here's the beauty. The remaining $50,000 would be treated as a distribution to you, and you would only pay federal and state income tax, but no self-employment tax. So let's do the math here. If you paid self-employment tax on the whole $100,000, that would be $15,300. But by utilizing the S-Corp status, you would avoid paying self-employment tax on the distribution part, which was $50,000, saving you $7,650. So right away, you can see some advantages of the S-Corps, but here's some things to consider. You're going to have to set up a payroll system, either paying someone else to handle it or you do it yourself. And you're going to have to file various reports throughout the year to the IRS and your state. You're going to have to file a corporate tax return under the tax form 1120S, as well as file your personal tax return. So there are some startup costs and ongoing filings. Now, with the LLC, you can opt to be treated as an S-Corp when it comes to taxation instead of filing that Schedule C. This way, the LLC can avoid self-employment tax on the distributions made. So you can start out as an LLC, and if you find that you're making way too much profit, you can backdate the LLC to be treated as an S-Corp for tax purposes. So the $64,000 question, which is right for you? Well, of course, that depends on your situation, but here's some things to consider. If you feel like you're not going to have enough in profit after paying yourself, then it may not be worth the trouble and the costs involved with the S-Corp, and possibly the LLC is the way to go. But remember, you can backdate that LLC to be treated as an S-Corp for tax purposes. The whole idea here is to save self-employment tax. You really should seek legal advice from a qualified attorney that can draft the proper documents and file to your particular state. I hope this helps. Good luck to you in starting your own business. If you like this video, please subscribe below, hit the notification. I would really appreciate it. Thank you. Have a great day.